myself Vaibhav. In our today's session of automated trading, we will be continuing our work with the Hull moving average, which is a extremely fast and smooth moving average, and it doesn't have much of an lag between the price action and the change in the direction in the average itself, and that helps us determine the change of trend early, and we can use it as our direction light, the guide for our trading setup. And here we will be using the combination of two HMAs, the 50 and the 15 time period on the 1 hour lead time frame. Along with that, we are also using the min max. It's fairly simple, the highest and the lowest value, and the ATR as well. Before we get started for the day, this is a standard disclaimer. Here I would like to remind that this session is simply for the tutorial purpose, and no claim is being made regarding the profitability or otherwise of the algorithms which we will be developing during the session. Suppose if you want to use any of it, I would recommend that you do extensive testing and also run it on the demo account for good enough idea of its efficacy. And of course, nothing in the webinar is to be construed as an advice to trade or for any particular setup. With that, we get back to the chart to see what we are doing. In today's setup, we will be working on the buy side, as we have got the bare bone structure ready, the base we have built yesterday, and now we will be adding layers to that setup. So in the buy side, what we need is the last hourly candle to have closed above the 50s HMA, and then the 15 HMA should be making a reversal after going lower. It should be reversing the trend, and for that we will be looking at the value 1 hour back, and then we will be comparing it to the value of HMA 3 hours back, and then that 3 hours back value will also be need to be compared with the value 5 hours back. So first it should be falling and then it should be picking up. That means we are betting on the curve of the HMA 15, and of course the price action is also there. We are also bringing in the difference conditions. We want the difference between the minimum and the maximum of last 3 hours to be good enough to warrant a fresh trade entry, and for that we will be comparing it to the certain percentage of the daily ATR, and with that we will also be taking the help of 1 minute's historical candle data, and we will be kind of pinpointing the last hour's closing level as our entry point. At that level we will be placing the order for the buy side, and it will be limit order, means we will be placing the buy side lower than the market value. And for that we have done some calculations as well in yesterday's setup, which is 20% of the daily ATR. Now coming to the visual G4x platform developed by Dukas Bank SA. Here we have done this instrument subscription first. The Euro USD is there. The position amount has been defined as 0. We have got in these indicator blocks, the HMA. Here as you can see, everything is defined on hourly time frame, and then we got the historical candle data as well, the min max for determining the volatility in the underlying instrument, the ATR, to get the precise amount. You can even say the volatility measure, and then we have done this calculation for the buy and the sell point, the entry points, and as I said, 1 hourly candle close will then give way to 1 minute, and we will compare these closing levels with the last hour's closing level, and then we will initiate the new trade. So here we have to build on to this structure, and I think we can straight away go in for the buy side setup. Of course we will need to do further calculations as well, but then once we bring in the pending open order, we will do calculations which are needed to define the stop loss, target price, and the order validity time. For the time being we keep some space open, and then we start to add the buy side requirements, the conditions which will need to be in place for our setup to complete. So here first thing we have to do is take the multiple action block, and as I said we will not join the flow, not yet. We will leave out some space and we will join the flow later on. Now we have to bring in couple of if conditionals. The if else scenario here, it's going to be, and also we will need to do some calculation for defining the difference between the maxima and minima, and for that also we are going to do some calculations. But for the time being, let us add some if conditions and then we will move on to the calculation part later on. So here we want last hourly candle to have closed above the 50 HMA, and for that we have to take HMA 18. As you can see, this is the candle block with shift 1, time period is 50 and it is 1 hour. So we have the required variable now, and it will need to be compared to the closing level of candle 19, and the candle 19 should have closed higher than the HMA 18. So here candle 19's closing level is going to be of paramount importance for us. All right, so now candle 19's closing level should be higher than the HMA 18, and then the attention will turn to the change of trajectory of HMA 15, and these will be our three initial conditions. So what we need to do is to look at the HMA 15's last hour's level, which is HMA 15 itself, and we need to compare it to HMA 16. Here HMA 16 should be higher than the HMA 15 should be higher than the HMA 16, first input greater than second input, and then HMA 16 should be lower than HMA 17. Okay, so here we are going to consider HMA 16 and HMA 17. HMA 16 should be lower than HMA 17. Okay, first input less than second input. All right, we have got it done. So let us take these three blocks where they belong. We have defined the HMA conditions, which are fairly simple to understand and to execute as well. So here we have HMA blocks in place. Now we have to ensure that the required volatility is there, and for that we are going to need to do the calculation, and for that we have to get mathematical components, calculation expression. Here it is. We will also need to compare the difference to the certain percentage of the daily ATR. And now we have to do the subtraction of lowest value from the highest value, that is the subtraction of minima from maxima. Maxima 21 minus minima 20. All right, we got it. And here MS Office convention to get the formula right, M1 minus A2, and it will be min max difference MD. So here it is. Get historical candle. Now this calculation is ready. Now the next calculation will need to be done. And for that we have to take the ATR, which is line 22, and line 22 needs to be multiplied by create new variable, and here I think a 35% or even 33% of the daily ATR is good enough. Last time around we used 40% of the daily ATR. Let us go with that ratio. Okay, so the ATR difference pips will be 0.4%. You can choose a different value as well. If you think that will be better, you can make it 20%, you can make it 30%, you can make it 40%, you can make it 50%, or even you can make it 100%, but I would not suggest that because it will be pretty rare for the underlying instrument to jump whole 100% of the ATR within 3 hours. It happens during some large volatile events, during some major decisions from the central banks, or even from major releases regarding the economic data, but not so often. Now we have created this variable. Let us get the calculation, and it is going to be A1 into A2, and the result of the calculation is going to be minimum difference MD. Oh, it already exists. Okay, ATR difference AD, and here we place it right after the difference we have calculated for the min max. So these two conditions are now in place, and we can do the comparison. We want min max difference, the MD should be greater than the ATR difference. Okay, so what we have to do is get another block, and we join the flow. Okay, so here it is. First input greater than second input. We also want When the buy trade is going to happen, we also want last 3 hours minimum value to be below the HMA 50, and also the last hour's candle close, which we have already defined, that conditions should be above the HMA 50. So the minimum level needs to be below 50 while the closing level needs to be above 50. So here we will now need to take into account the minimum of last 3 hours, and that is going to be the bid low price. Okay, so here it is, minimum 20 needs to be less than HMA 50, and that is HMA 18. Now we get one more if block. All right, so here we have it, and it should be less first input less than second input. So we have added these two conditions, and the setup is fairly simple, not much an complexity there. As you can see, we have relied mostly on these two HMS combination. So I think most of the conditions are in place, and now what we will need to do is look at the last two candles of 1 minute each and then compare those to the last hour's closing level. So here comes these two get historical candles of 1 minute each, and we have to take into account the closing levels for candle 26 and candle 27. For a buy trade, the price should be rising, which means we will be looking at the closing levels, and we want last minute's candle close to be higher above the last hour's candle close, whereas the prior minute's candle closing level should be below that hourly candles closing level. So here the candle 27's close should be higher than candle 19's closing level, whereas candle 26 closing level should be less than the candle 19's closing level. So that is how it is going to be defined. And first let us take into account the candle 19's closing level. For that we are going to need one more if block, and here it comes, candle 19's closing level, one more if block, and then we have to check for the candle 27 and candle 26 closing level. Candle 26 should be less than candle 19, whereas candle 27, oh, I think I have made a mistake here. We want candle 27 to close higher, so it should be first input greater than second input, and candle 26 should be having a close below the candle 19's closing level. So that's how it should be. Now we have defined this for more conditions, and it's time to bring in the pending open for a limit order, and there we will need to do some calculations. So here we define these parameters. Okay, and here it comes. We got these 6 if conditions in place. Now we need to bring in the pending open, and that is going to be the trading block. So here is the pending open order, and as I said, candle 26 close needs to be lower than the candle 19's closing level. So we have that covered now, and it should be a buy limit order. Okay, so we have got the 7 conditions which need to be fulfilled for any trade to be executed. And now we have to define the parameters for the buy order. BE trade amount can be anything depending on the equity in your account. 0.1 is what I stick with, and slippage 2 pips. Now we have to create fresh variables to take place of this stop loss and target price, the take profit, as well as the order validity time. So what we will need to do is do some fresh calculations, and then we will have the required variables in place. So let us now again start doing the calculations. Mathematical calculation expression, and let us go back to the chart to see what kind of stop loss will be good enough. And when the last hour has closed above this 50 HMA, and HMA 15 has bent on the upside, we don't really want to get involved at that point in time, as because of the already the move which has already happened, it will be trading higher, and we want things to cool down a bit. For that we need to provide some buffer, and that's why we are opting in for a pending open. And I think the 15% of the daily ATR is good enough. It will be fairly close to the current levels, and also it will give some room for the price action to unfold, and we will keep its order validity for 2 hours. Sorry, I think not 15%. We will need to keep the stop loss bit wide. I feel the 20% of daily ATR is good enough, and then for the target price, we will be keeping a target price of the 50% of the daily ATR. So let us do that calculation. We will need to create fresh variable. Before that, we get this ATR, and the ATR is line 22, and we multiply line 22 by 20% of daily ATR, that is 0.20, and it will be called SLP, stop loss pips, will be 0.20. Okay, so here we have got this in place, and we also need to convert these double values into the integer format. For that we will need a multiplying factor of 10 raised to the power 4 as we have euro USD pips defined in 4 decimals. So for that we have to create a type conversion factor and its value would be 10,000. Right, and this whole calculation is going to be a1 into a2 into a3. So here we have, and this needs to be in integer format. Its name will be SL and start value would be the result of the calculation. So here we have defined the stop loss level now. But as the time is running out, I don't think we will be able to finish this whole setup in today's session. Even you can give it a try how to create this target price variable as we have done for the stop loss. Just in similar manner, you can create a variable for target price as well and for good till time, the order validity time. Tomorrow we will do it, or you can, if you are in hurry, you can refer to my earlier sessions where we have calculated this order validity time as well. Even in last setup involving linear regression intercept, we have done the same. So you can refer to that as well. So to complete the pending open for the buy limit order, we will now need to create two variables, the TP and the order validity time, and we will do it in tomorrow's session. So here I would be signing off for